Welcome to another S&P 500 analysis. Apple reported its earnings and it dropped 5% the following day. And for the week, Apple lost 7%. So is this mega cap stock warning us about something? A lot of people is talking about the market might be going into a correction after last week's sell-off. So is the market in a correction or entering a correction? In this weekly edition of the S&P 500 analysis video, I will show you what I'm seeing and what the market is telling us. Stay tuned. Let's start looking at the market and see what it did for the week that just passed. Looking at this table here, we see all the indices are negative for the week. But the Dow Jones Industrial was the top performer and only lost a little bit over 1%. And the worst performer is the Nasdaq 100. It lost over 3%. Looking at this weekly chart of the S&P 500, we notice the range is sitting at 119 points. And it lost over 100 points or 2.27%. It still closed above the 10-week and the 40-week moving average, but it did break the 3-week consecutive upward streak here and also broke the one-time framing up. And looking at the sentiment chart, we noticed that the VIX came off from the 13-ish level and now is up at the 17. So the market participants are getting a little bit more cautious now. And also the put-call ratio is sneak inside of this zone between 1 and 0.75. So definitely the market participants are getting a little bit more cautious. And taking a look at the pulse of the market by looking at some of the internals, we noticed that the up-down volume ratio in the New York Stock Exchange was mostly negative throughout the week. I mean, there are more downside volume than upside. So definitely there was selling pressure in the New York Stock Exchange for the week just passed. And also looking at daily advanced decline, we also see broad market participation on the downside, and there were more stock losing ground than actually stock gaining ground during those sell-off days. Now, also take note on Friday, the S&P 500 was down 23 points, but the advanced decline, actually the advancer outnumbered the decliner by 313. So that showed a little bit of a positive divergence between the S&P 500 and the daily advanced decline. And there are still more stock making new 52-week high than 52-week low for the week just passed, so that's a positive for the New York Stock Exchange. And the positive divergence between the cumulative AD line and the S&P 500 still remain unresolved. So expect to see the possibility that higher high for the S&P 500. And looking at the internals of the Nasdaq market, we noticed that the up-down volume ratio was also pretty much negative throughout the week, except on Monday and Thursday. And on the daily advanced decline, we did see a broad market participation on the downside on Tuesday and Wednesday. But Thursday and Friday is not so bad because on Friday, even the Nasdaq 100 lost over 0.5% or 78 points. There were only 275 more declining stock than advancing stock. So that's a positive. Now, we are seeing more stock making new 52-week low in the Nasdaq market than 52-week high. So that is not a good sign. And once again, this huge negative divergence between the cumulative AD line and the Nasdaq 100 still persists and still remain unresolved. And that's a major concern. And we are expecting it to get resolved by the Nasdaq 100 coming down, while the AD line may be making a little bit of an upward move, or it could also continue to decline. But nevertheless, it is a negative. And looking at this yield curve, the 10 versus 2, we did see it come up a little bit, but it's still sitting at negative territory. It's sitting at minus 0.73. So this inversion still pointing to a possibility of a recession in the U.S. economy. And here looking at the 10-year yield, we did see the 10-year yield came up to close to that 4.25% as we were expected to see. And then once it get close to it, it kind of pulled back on Friday and dipped back down to 4.0%, 4.06 to be exact. So again, we are still looking at the 10-year yield to hover around between this 4 and 4.25. And I wouldn't be surprised when September rolls along, we're going to see this yield move above this 4.25%. And the US dollar came up to this trend line here and bumped against that for a little bit of a rejection. And right now, it is still sitting above this 102 level. So we could see it try to break this trend line and come up to this 103.8 if the 10-year yield continue to move up. Otherwise, we could see this dollar pull back maybe to the 101 level and try to find some support there and then move back up again. And here we are looking at the dollar futures. You can see that it came up to this 102.4. Now it's backing off a little bit. So we'll still continue to watch for a chop inside of this balance area here between 100.8 and 102.4. If it break about this 102.4, then we'd be looking for the dollar to come up to this composite point of control near 103.8. And looking at crude oil came up to the 83 area as we projected that we're expecting to see crude oil to continue to move higher. And the level that we're expecting to see is about 82. So right now we are watching to see would it be able to break about this 83.39 and enter into this balance area. And if it does, then we'd be looking for oil to move back up to the 90 level. But if it get rejected over here at this 83, then we'd be watching it for it to auction back down to somewhere around this composite point of control at $80 level and see would it get a bounce off of that. So right now I'd be watching for oil between 80 and the possibility of breaking above this 83.39 and move toward this 90 level. Now for the precious metal, we did see silver pull back a bit last week from the composite point of control near this 2450, 25 area. You see that it came up to this $25 level and pulled back, and right now it's back inside of this lower area of this balance area here. So I wouldn't be surprised to see silver to possibly come back down and test this 22.72 for possible support. So watch this level at 22.75 area and also this trend line. We also saw gold pull back a bit last week against a strong dollar here. We see that the gold came back down to about this 1970 level here. So right now we're basically looking at this high volume node and see would it get a bounce off of this high volume node near this 1978 area. And if it doesn't, look for it to come back down and possibly retest this 1950, 1940 area before we look for another bounce up toward the 2000 level. Now, if we could find support between this 1978 level, then look for a break and come up to test its 2000 level once again. And if we could get above that, then watch this composite point of control at 2019. Now let's take a look at the indexes, starting with the S&P 500. We noticed on Wednesday it got a big sell-off as soon as we saw the 10-year yield went up to 4%. And then on Friday, we have that followed through by the negative reaction from Apple's earnings. So we saw a down week last week, and it closed below the lower range of the expected move. So for the coming week, the expected move, the upper range is between 4552.50 and 4544.70, and the lower range is between 4411.40 and 4385. So what we're going to be watching for next week is this gap here to see will it come down and fill this gap, and that is somewhere between the 4460 and the 4444. If it fills this gap, then we'll be looking for the possibility of coming down to this lower range. Now, if we do see a bounce back up, then we'll be looking at this 4512 or 4513 to see would it come back above this level and get into the upper range of the expected move. And we also have this FOMC scene of the crime level that I put down, and that is somewhere around this 4555.64. So that would be a level to watch on the upside. And for the NASDAQ 100, we also saw the NASDAQ 100 sold off on Wednesday along with the S&P 500 as the bond yield went above that 4%. And then we got this follow on Friday with Apple's negative reaction on its earnings here. So it also closed below the expected move, the lower range of the expected move. And for the coming week, the upper range of the expected move is between 15,660 and 15,597.60. And the lower range is between 14,952.20 and 14,840. Now, we are expected to see it continue to move down and break this 15,274 275 area and come down and fill this gap and also get into this lower range of the expected move, which is also in confluence with this high volume node or high volume area here. So be looking for more downside and come down, break this 15,000 level and get into this 14,950, 14,850 area. And for the Russell 2000, we did see it break above this 2,000 level earlier part of the week, and then it sold off along with the rest of the market as the yield went above that 4% level. And right now it's sitting somewhere around this 1957, 1960 level. So we'll see, will it be able to get a bounce back up to the 2000 level, but I'm looking for the possibility of breaking below this 1950 area. And if it breaks this 1925 level, I'm expected to see it come down and fill this gap between 1920 and this 1915 area. Now, recently, the Dow Jones Transportation had a nice run up, and right now we're also seeing it come back down along with the rest of the market last week. So we'll be watching to see would it be able to get a bounce off of this 16,300 area and possibly move back up toward this 16,600. Or if it continue to move down, watch this 16,170 area here, this high volume zone. If it break below this high volume zone here, then we could see the Dow Jones Transportation come down and fill this gap near the 16,000 area. Now, looking at the Dow Jones Industrial, notice on Tuesday actually made a new 52-week high. Before on Wednesday, it came back down along with the rest of the market due to that 10-year yield. And then on Friday, of course, we also got the sell-off from Apple, and that also yanked down the Dow Jones Industrial. Look for continued rotation into the value and the industrial stock, such as the energy and the financial in the week to come, even though if we get the technology to sell off in the NASDAQ 100. So for the coming week, we're going to watch to see will the Dow Jones Industrial get a bounce from the current level near the 35,000 and pushes back up to this 35,500, or would it come back down and possibly check this 34,300 area. So depending on what Apple does in the coming week, if Apple continue to sell off strongly, then watch out for the Dow Jones Industrial to also get yanked down by Apple, unless we have a strong move in the energy sector to offset Apple's downdraft. And finally, looking at the New York Stock Exchange Composite, we also noticed that on Monday it closed with a 52-week high. So you can see there's this rotation going on between the high growth and the tech stock into some more of a value and defensive stock. So we're seeing this rotation into the energy and possibly into the financial. So keep an eye on these indexes. They might be telling us something about the market is shifting or rotating. So be a little bit more defensive in the coming weeks or in the coming month. So for the New York Stock Exchange Composite, look for this 16,000 level to see will it be able to hold this for support here. And if it breaks, then we'll be looking at it come down to possibly this 15,700. But if we do see a support bounce off this 16,000 area, then look for the possibility of coming back up to the 16,250, 260 area, and even possibly make its way back up to a new 52-week high in the coming weeks. So are we entering into a correction for the market? Well, looking at the technology sector, we see that the technology is starting to turn lower. And with Apple's disappointed earning reaction, that definitely does not help to propel the market into a higher level. So right now, we're looking at this relative strength of the XLK, the technology ETF, versus the S&P 500. And going back to the October of 2021 and early part of 2022, we see that the relative strength of the SLK is starting to level off and starting to break down in the beginning January of 2022. And notice that we also see the S&P 500 follow suit, and we have this correction down to October low in 2022 before we see the market start turning back up. Now, if we look at currently, you see this XLK relative strength is kind of flattened off as well, similarly to the period back in November and January, November 2021 and January 22. And we're seeing this level off. So if it breaks below this level here, somewhere around this 38.22, and if it breaks down, then we could expect the S&P 500 to do a similar type of pullback or a correction as we've seen back in 2022. Now, here's another chart that I want to show you that kind of give us a little bit more clue on what to expect. And here's the chart of all the indexes that I'm following here, these major market indexes, the New York Stock Exchange Composite, the Dow Jones Transportation, Dow Jones Industrial, S&P 500, NASDAQ 100, NASDAQ Composite, and the Russell 2000. Now, what I have done here is mark off the high that these indexes have made and when they make those high. Now, you notice that on the NASDAQ 100 here, back in 2021, we saw it made a higher high preceding the S&P 500 and also the Dow Jones Industrial. Similarly, if we go and look at the present day, we also notice that the NASDAQ 100 made a higher high back here in the July time frame here, and right now it did not make a higher high, while the S&P 500 and the Dow Jones Industrial recently made a higher high. So if there is any indication of the possibility along with the XLK breaking down that we could see this type of a reaction from the market, a repeat of the 2022 correction, then that is what we should be on the lookout for. So the key thing to watch right now is the technology sector relative strength and how well all those FANG stock going to be performing in the coming day. We noticed that the mega cap Apple have a lot of influence on a lot of the indexes and also the ETF. So pay attention to how Apple is going to react in the coming days and in the coming week, because that will be a major indication of what we could see in the months ahead. I hope you found this video to be useful and informative, and be sure to smash that thumbs up to help me promote this video on YouTube. And if you're new to this channel and you have not subscribed to this channel yet, show your support by clicking the subscribe. Thank you for watching and stay safe.